Hey everybody, Brian here from quantlabs.net. Okay, so in this video, I'm actually going to do my first set of quote-unquote market calls. And essentially, these are not stock recommendations. These are just from what I see visually and based upon my experience of other stock and how to play them based upon a very simple strategy that I'm building out based upon some very simple fundamentals, EPS, earnings price per share, plus market cap, be able to identify a long and a short in various what I would consider up and coming hot market sectors. There's going to be 3 video segments, including this one. The second one will show you basically an overview, a snapshot of the U.S. economy. From there, I'm able to identify the hot markets to look at. Now, remember, when you're looking at your market sectors, you're going to have your cyclicals versus your defensives. And because of what I've identified in the next video segment, you'll see that I'm seeing a trend where things are turning for the positive for the consumer. And then in the last fairly lengthy video segment, I identify 4 market sectors that I'm guessing at that are cyclical, but yet that are dependent on the consumer. 3 of them are real estate. And I do verify one of the videos or one of the charts that I shows pretty good housing starts. So I'm putting quite a bit of emphasis on housing based upon the sentiment of the U.S. Consumer. On top of that, because another big factor where consumers is travel. I just came back from California. I can tell you all 4 flights I was on were all jammed. People are traveling. So I'm handpicking 4 airlines or do an analysis on major airlines. Funny enough, 3 of them were international outside the U.S., but 2 of them were American. So I do a short and a long for all these different market sectors. So I'll show you how I get to those market sectors, and I'm going to probably a week or 2 check them out to see how they're doing. I'd be pretty happy if any of them are pretty profitable. Now again, these are just recommendations based upon what I'm seeing. I'm not saying go out and actually put trades on these pairs. Don't recommend it. If you do and it works out for you, great. If it doesn't work out, don't blame me. I'm not a financial advisor. I'm just basing upon what I'm seeing based on charts and data. That's it, okay? So hopefully it'll help you out, and I'll talk to you soon, maybe somewhere. Maybe I'll meet up. Who knows? Later. Hey everybody, Brian here from quantlabs.net. I'm going to be showing you a snapshot of the U.S. economy for March 7th, 2016. I haven't done this in a while. Interesting things are coming out of this. Things don't look so bad. So I'm going to be using the source code project that I've highlighted in a past video. This will be part of my first phase strategy to assess government data, specifically for the US. I'll do another video for Europe as well. And then I'm going to do a rough eyeballing visualization on where I think things look good in the US economy, all courtesy of the Fred data that I've shown in a past video of the source code project. So I'm not going to go over that. I'm just going to show you the reports themselves. So what I've done here is I've put together a list of what I think are the hot little reports that may be useful for some. And let me just get that list together here. Okay, so these are the reports that I think show signs of life coming from the consumer. If you asked me last time I checked this, maybe back in December, things didn't look so hot, but funny enough, the consumer seems to be coming alive in the US. I'm going to show you that. So specifically the reports I want to show you, which are generated here for today, there are a bunch of reports that I could easily show you. There's this one, which is called the Continued Claims Insured Unemployment. As you can see from '08, where '08 was very high, it's come down, it's hitting 98 levels of unemployment, pretty close. So that's good. So that means that people are working now in the U.S. Funny enough, when you look at some of the other reports here of manufacturing new order durable goods, these are hard goods. I can verify by looking at the raw data where it gets downloaded from the Fed website, the St. Louis Fed. What you'll notice is in this little section here, sorry about the charting, but right in there, it's sort of flatlining. So I can easily verify that by just looking at the raw data for the last few months. I don't think there's going to be a lot of indications of things that will be flatlining, but you can see there's been some slight declines all the way back to May, and then a little growth in the summer of last year, in 2015, negative growth, a little growth here, and some more growth here. So basically it's just been flatlining. There's no momentum, as I've hinted here. All right, so knowing that, we can continue along and look at the positive reports. So we got this report here, which is essentially the NAP MCI, this guy here. You'll see these are manufacturing customer inventories. They're coming down, okay? They're going down, which is good. Means they're working off those inventories because of consumer demand. So when you continue looking at new orders here, another good sign is we've got new orders, non-defense, capital goods. You can see that uptick right there. Oh, I didn't know I could do that, but there you go. Then we also have, this report I want to show. Non-farm private payroll, it's going up. It's been going up since 2010. Quite the upswing, better upswing than the previous upswing between 04 and 08. That's pretty good. So here's another good one. Permits of private housing units authorized. They're on the rise. So that's all consumer driven, obviously. We have another report here. University consumer sentiment. This is on the rise since 08. And of course that makes sense because of people working, their confidence goes up. And you can see that. So people are starting to buy. And the other thing is the unemployment rate. We all know about this, where the unemployment rate is now below 5, and it's at the level just before 08. Came along and made everybody unemployed. So those are the good signs. Now, because as a consumer, and we all know that the U.S. market is consumer driven, we've got some good news. The GDP continues to go up. Here's the bad news. Now, if I could just show that. Here, let me just see if I can. Boy, oh boy, I don't even know how to use this program. Okay, let me just do it that way, the old-fashioned way. But you can see it's flatlining, so nothing big has been happening for the last few months. That's for the industrial production. If we start looking at this one, roughly I can give you the same news, but actually business equipment is going down. All right, and that is not a good sign, but if you ask me, the durable consumer goods flatlining still, I will assume. Let's see, I think that's the end of that. Oh no, we can see it flatlining there, nothing to get excited about. This is the industrial production manufacturing. Again, no growth, but it's not declining either. The industrial materials declining. Mining, this has been a huge hit, obviously. Been trending down for a while, probably due to coal. This one, PMI, it's below 50, which is not good. That means it's in condensing. The manufacturing backlog I showed you is gone up, which means manufacturers and business are not buying a lot of these products from a business production point of view. Let me show you another one. Customer consumer index is falling, which is good. So on the consumer side, everything's improving. That's the good thing. Look at manufacturing employment index, it's declining. Let's see what other we got. New export, no growth there, just due to the fact that emerging markets are not importing. Manufacturing inventory is down, which is good. Here is the manufacturing import, not as much importing because of very little business activity. New order index is down. The pricing index is definitely down. So this is where it gets kind of scary, because are we dealing with over the last few years, so let's say over the last 5 years, since roughly 13, everything's kind of been deflating, and that's kind of worrisome. But the thing is, when you see the consumer coming alive, that's good. So, and usually I've heard many reports say from an economic standpoint that 2/3 of all economic activity in the US is driven by the consumer. So they've been dead for a while, but they're starting to come back, which is a very good sign. Manufacturing supplier delivery, again, flatlining, no growth, no decline. New orders, it seems to be on the rise a little bit, as you can see here. Let me just see what we can do here. Gotta get used to it. Yep, so it declined and it's come back. And again, you can always look at the raw data that this script that I've got will generate. And you can see it's a lot of detail here. All different levels. Unemployment, permits, we looked at all these three. So again, what I can say based upon these charts, consumers coming back, they definitely looks like it's bottomed. It may be on an upswing. So what does that mean? Let's start focusing on consumer-related market sectors. So I'm going to choose a few and try to get a long and a short to play. All right, so we'll see what happens. Hello everybody, Brian here from quantlabs.net. Okay, so previous video segment I showed you a variety of economic snapshots on where I think the consumer's on the rise. Last time I did it, I also looked at what was strong a few months ago, and the only thing that I saw that was strong was the housing market. So what I thought I would do is take it to the next stage and show you the market sectors on what I think are going to be the hot opportunities for pair trading or arbitrage. So a lot of people may not know about this spreadsheet that you can easily download from here at investexcel.net, and it's just been updated. Each time that this gets updated, which seems to be once a year since I've been tracking it for the last 2 years, it's usually updated in January of each year. So it's just been updated 2 months ago. But then you also have to update your MongoDB that I introduced in the strategy and in the previous course series to show you how the database works. So I'm not going to go into details, but you can see you get over 27,000 stocks that are globally identified throughout all the major markets that Yahoo Finance tracks. So here we're just going to focus on really the NYkew exchange because this is the symbol here. But when I just do a search for the exchange at NYkew, you can see the majority of all the REITs that I'm going to work on for residential. We've got something like, I don't know, let's say, I think it was 30, and close to 30, which is decent enough, and it meets my minimal requirements of market cap of being a billion. And also I'm going to be using the EPS as well, in this case using the next EPS. Now, if you are a member of mine and you have access to the source code, which is right here, this is a process market category source code in Python. This will process and extract and download all the necessary data that you would typically use to identify those market opportunities for arbitrage. In this case, what I'm doing is a very simple query to my market, my own MongoDB database. So as I said, I'm only doing NYkew, the exchange, and I'm only going to work with the REITs, REIT residential, because as I said, hot market, put it into the REIT market, residential specifically. So let me just show you some of the better ways to find your market sectors. So here in the spreadsheet, and I've shown this before, you can see you quite literally have a lot of market categories. Not only that, but you also can get the exchange of where those tickers or symbols come from. They range from NYkew, Pink Sheets, the Vancouver Exchange, the Toronto Exchange, Germany, New Zealand, throughout Europe, France, so on and so forth. So that's pretty cool. So again, if I just go back to my top here to show you this, I'm really only interested in choose one. Okay, I'm going to deselect that. I'm only interested in the REIT, REIT. And see, there's different classifications, but we only want residential, and there you go. That's all there is to it to get those displayed. So what this, again, this script will do is it will download all those symbols and get things like the latest date, change, high, low, volume of the last current activity for the open, high, low, volume, and again, these are the important ones, the EPS, earnings price per share of the current next. But as I said, I'm only going to focus on the EPS next, and I do care about the market cap of being at least $1 billion. Okay, that's what this script does. I've got a walkthrough that will walk you through this. So essentially what I've done is I've run it, and all those is kind of crude. I can also further automate this in the future, which I will do, but I just want to show you the potential of this. So once you run this script, what it will do is it will run the script and generate this file, which is a CSV, a comma separated file, and there you go. That's all there is to it. Imports it easily into my into my Excel, because it's a CSV. So from there, as I said, we are only focusing on the either this or this, the EPS current or next, and the market cap. So again, I can automate this, no problem. I'm just doing this crude in a human way, just to show you some examples of how I'm working with this for now in terms of signal generation and to identify those market opportunities. So if I sort, I think I got not a Excel expert here, but if I sort all those, I want to sort my EPS current. No, I'm going to do EPS next. We'll do smallest to largest. So here we go. So this is what we have in its current form. Here, I would probably say that would be a long in terms of the pair that I want to use. But here's the red flag. Because the EPS next is not applicable, meaning they are not issuing guidance for EPS next, that tells me that this company does not have their forward guidance is not, they don't have the confidence in their forward guidance, which is a shame because currently they're doing quite well here. So your next bet is probably go with the next one of RESI. Okay, and also the nice thing about this company, even though I don't know which one it is yet, it has a nice market cap of $26 billion in terms of as a long opportunity. Now here's the question we have ourselves. Again, I have to automate this, build the logic for it, but the short could be one of these three. The larger the market cap, obviously, the better it is because it's more liquid. If you get into a trouble trade, you can dump it faster. This one obviously would be easier to dump because of the market cap, so there should be a lot more volume on that particular stock. But you do want to have your short opportunity, and personally I'd probably go with this one because it's at least close to $500 million. Although these EPS guidance are pretty good, and I bet you there's a lot of the manufacturing that don't have an EPS as strong as this, and as a result, this is a good market sector to be in. But at the same time, you may want to play in the same market sector. But the AMTG could be your short, and your EQR could be your long. So let's fire up our charting here in Yahoo. Let's just do a quick comparison between the two, between the long and the short. Now, I will put this out as a formal call, my first one, and let's just do a comparison right now. So, equity residential, we are looking at an intraday chart. I'm not interested in that. I will look at a 3 months, let's say from the beginning of the year. So this is looking good. They did come off end of the year as the rest of the world and stock markets came. But our bottom is not too far off because today is March 7th. So we may have just maybe barely caught this as a play for an opportunity for longing. So that's pretty good. Now, let's plug in a comparison chart with our short, which is AMTG, and let's just see what happens here. So we'll do a comparison of AMTG. So we have Apollo. Looks like we may have it backwards. Wow. That's very interesting. Maybe this should be the long and that should be the short. But I don't know which way to play this. But there's definitely some kind of news event that happened to really put this puppy up ahead. You could always go through the news to verify things, but knowing that, maybe that's not such a hot one to go with. So we'll go with RSO for the short. Get rid of this. And let's do the RSO. Resource Capital, I believe that would be it. Funny enough, there's still playing a little better. Why don't we do with this one, Oaks? See what that comes up. Okay, Oaks. Oh, this may be a better one actually. Now, a system may not be able to see this, what I'm just doing. But again, it's just to give you an idea. So as these diverge, hopefully, with Oaks going down, and obviously, because that's the short, and the EQR going up, and it diverges, that spread as it diverges becomes your profit opportunity. So this one I would probably kind of go with. So let me make a note of that. We'll do our first call on a REIT, real estate investment fund. So we'll do a first call. We'll put it March 7th, long EQR, short RSO, I think it was. Oh, sorry, Oaks. Okay, so I said I'm going to do 3. Let's look for another one. Okay, we'll just leave it at that. So why don't I just show you how to do this in the code. Now again, I'd be building out logic to automate this process, but I just want to show you how you could use this as an opportunity to do this visually and as a human. Okay, so we're going to select all. Now, all we're looking for really are anything to do with the consumer. Now again, if I have data, I could run this day in, day out looking for these opportunities. So I kind of want to stick with housing. Let's see. Now again, you got to remember there's a cyclical versus the defensive. Because I've done this enough times, I know what will be a cyclical. Because I do believe as the consumer side is coming from a defensive segment, everything's going into definitely into a cyclical versus a defensive. So we want to look for sectors that are more cyclical than defensive. So as I go through this, let me see what we got here. Major airlines may be an interesting one for consumers. More people travel. Mortgage investment would be another one. Let me just write these down. But again, these are for equity. So what are we doing here? I said major airline. So these are the other sectors I'll consider. Major airline and was it mortgage investment. Okay. Okay, so so we're at mortgage investment. Let's see what else we can find that is cyclical and something that would be red hot. Property casualty insurance, but that's more defensive. Recreational goods may be good. Recreational vehicles may be good. They just won't have what I'm looking for in terms of opportunity and payback. Residential construction may be a good one. We'll add that. Residential construction. Okay, let's continue along. I'll run a couple of scans and see what we can come up with. And I'll put those as formal calls, and we'll check back in a week or so and see how they did. Rental, leasing, restaurants maybe, shipping, silver, sporting. Yeah, they could do okay, but they won't have the opportunities I'm looking for, I don't think. Textile, same with apparel. Those would be interesting. Wholesale, wireless. Okay, so let's leave it at that. We're gonna now do. Let me just check out these two that I've chosen. So we're gonna deselect. We want major airlines was one of them. How many have we got? So we have quite a few to choose from, but the question is the New York Stock Exchange is what we're after. There's just not going to be enough. Let me just see. NYkew. Okay, let's see all the. Well, I can only do one query. Let me just see. See, there's only 5 in the U.S. But the question is, don't think there'd be anything on the NASDAQ. I'm going to try this out because we have here China. I could see that being a short. I could see maybe one of these two, United or Delta, being the long. Now again, I'm stressing I'm going to automate all this. But again, I'm just going to run this scan and see what we come up with. So we got NYkew. Let me just copy paste that into the script. So we're going to do, hang on, let me just see how many other, so we got 5 there. I've got 4 sectors to choose. So I'll choose mortgage investment, see how many we've got there. Select all. No, we don't want that. We just want one. So we want mortgage investment. That could be an interesting one. Okay, so we'll do major airlines. And what was the last one? Let's see, residential construction. Okay, maybe we could find something in residential construction. So I'm going to unclick that. Residential construction. Wow, there's quite a few for New York Stock Exchange. So I think we have found our sectors. So what I'll do is I will do mortgage investment, and then I'll do residential construction. Okay, so let's do that. So we'll generate a new spreadsheet. Okay, mortgage investment. Okay, let's run this. Let's see what happens. Again, mortgage investment. Didn't get any. Residential construction. Let me try residential construction then. Residential construction. Let's hope that this can bring back some data. And generate a file for us, an Excel file. Okay. Let's hope that this works. It's found 18. It's generating a file. Let's see what it generates. So that would be this one. Okay. So that's residential construction. Or was it mortgage investment? No. Yeah. This one, residential construction today. That's what we want. Residential construction. There we go. Okay, so let's do the same thing we did before. Do a date, data Sort. I got to highlight all these. Data sort. Sort by. We'll do next. Okay. So here we go. As you can see, the EPS is not as strong as our last category or sector that we used, but there is still some kind of opportunity. Okay, so we've got here two interesting longs to choose from, UCP, and then our short could be one of these. I'll try this HOV. So let's try UCP. UCP. Okay, let's see what happens. So we got UCP. We'll do a 3-month chart. Okay. Okay. So same pattern as before. So let's check out. That's our long that we're going to look at because it's got not good, not good. UCP only has 49 million. We want this one at 6.36 billion market cap NVR. NVR. Okay. 3-month. What do we got here? This is expensive. Wow. We'll just play it just for kicks. We'll just watch it. We don't have to invest into it. But the long is at 1,500. That was mid-February, and it's already had a 10% return over the last 3 weeks. Not bad. Let's see what happens. Now we'll do our short. We could always choose this one, LEN. The EPS is not much different, but let's see if this was something a little more palatable in terms of affordability, in terms of stocks you could buy. So we'll do LEN, Lennar. Know these guys. So we'll do a 3-month. How much is it? $45. Nice. So seeing the same return, better bang, just over 10% return. Would be comfortable in doing this long. Okay. So now we're going to do a long on LEN and a short. Should maybe help to put the category here too. Okay, so there's our long. Now let's figure out our short. Let's try HOV. See, you want to factor in, HOV would be our best because their guidance isn't that strong. So that's HOV comparison. Hope we don't have the same pattern as before. Yes, we do. HOV is actually the better return. Interesting. BZH. How they compare? BZH. Oops, Beezer Homes. So we'll do a comparison there. BZH. Oh yes, they may be it. Lennar and Blue is doing better. So BZ, I would be okay with that. BZH for the short. BZH, we'll see how they do. So this category here was REIT residential. Okay, last one. Mortgage investment. Let's see how we do with that. I think we tried to run it. Might have been a bug or something, I don't know, in the my Python script here. Okay, mortgage investment. All right. So do mortgage investment. Invest. That was the problem right there. No T. Last random. Let's see what happens here. There we go. We got 15 generating the file. Let's see what happens here. So we have mortgage investment. All right. So now we've got mortgage construction. Let's check out this one. Okay. So we've got here data, or sort our data. Column, do EPS next. Okay. Not as strong. That's definitely a bug right here. EPS of 276. I don't think so. I don't think this is going to be as strong as the others, but we'll just give it a shot. 872, pretty close to $1 billion. Nobody has $1 billion in this category for market cap. So we'll just go with HTGZ. Let's see what they have to offer. HTGZ. Hercules Technology Growth Capital. 3 month. Okay, you can see that these stocks are starting to turn around. So we may not be too far off from the bottom. Okay, so that looks okay. How much is the stock? 1151. Let's see our short. This one would kind of scare me. I'll go with the AI. Yeah, they have EPS of 3.61. So we'll do that as a short. 3.61. Okay, so what was the name of the stock? AI. Okay, let's do that. AI. Woohoo. Okay, AI. Okay. Oh, let me just go back. I was supposed to do a comparison. Okay, so we're going to do a comparison with AI. AI. Okay, let's see what happens here. Okay, so you don't want that short to be higher than the long. I mean, it could be a good thing, but we're just playing around here. So let me just try the JGW just for kicks. Get rid of this guy, JGW. We want a weak one. JGW. Oh yes, perfect. JGW is going to be our short. So we have got. Okay, so that was residential. Sorry, mortgage investment. Make sure I got the correction. So in this case, what we're going to do is we're going to do a long on, short on JGW, short JGW, and a long. Okay, so we're going to do our long on HTGZ. HTGZ. There you go. So, should I do major airline just for fun? Why not? All right, so we're going to do major airline as a fourth call and just see what happens. So we have 3 that are involved in real estate for consumer, and we're going to do major airline depending upon to see if people are actually traveling. Let's see what we dig up in this one. Major. I find this is kind of fun, but to automate it is even better. But for now, we're just playing around, showing the potential of these scripts. Okay, so let's just run it. 0. Major airline. The question is that a typo? Okay, let me just go to the top here. Deselect all. Deselect. And then we want major. Is it major? Oh, airlines, that's why. Okay, so we want major airlines. We only have 5 to choose from, and 3 of them, one of them looks European, and 3 of them, or 2 of them look Chinese. Be interesting to see what happens. This could be an interesting one. Okay, so we want major airlines. Okay, let's run it. So we got 5. We know that. Let's see what it drums up. Major airlines. Okay, doesn't look too good. All right, so interesting. I think it's already sorted. Okay, so what we're going to do, I'm going to choose this VLRS as my long and UAL as the short. Not a fan of UAL anyways. So let's clear this stuff. What was the stock name? VLRS. 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 This looks like a Spanish airline. Controladora Vuele Compañero. Okay, I'm not going to attempt my Spanish here. It's not too good. All right, so we're going to take, wow, that's quite a run up. 16, it's already gone up 25% in same time. Something big happened on February 11th. All these stocks, the bottom date keeps pointing back to February 11th. But no matter, I like it as a long, and I think our short was going to be UAL. Let's see what happens here. Comparison, UAL. UAL. Okay. Beauty. All right. So let's go with that. So we've got our major airline, long, VLRS, short, UAL. If I got that. Okay, so VLRS. Okay, so that's our calls. We've got 4 calls for March 7th. Let's check back in a week and let's see how these hopefully diverge, and just do a calculation on if any of these actually pull through based upon the quick fundamentals that I'm using for this strategy for paired trading. One thing I want to highlight here, I forgot to mention, this just doesn't only work on stock, because you have access to ETF, futures, index, mutual fund, currency, all these other asset classes. You can use them. These could be really useful in ETF as well. In my case, I'm just doing simple stock. And we'll leave it at that for now. And hopefully you liked this video. Check back in a week to see where I did or how I did. Usually, these kind of, you put on a position, you're usually going to hold these for a month to 3 months, but you don't know. Depending upon the volatility of the market, volatility has come down, so the markets may have settled down, so there might be some momentum on the upside. So hopefully that'll pan out, but let's see what happens. Again, thanks for watching, and hopefully you enjoyed this video. I'll talk to you later.